Okay, this is a video to help you get started on the first discussion for Lockheed Martin. If we go to the discussion, click on part 1. First thing you need to do is load this annual report. So we'll start there. Take a minute, it's a fairly long document. Okay, so if it's a publicly traded company like Lockheed Martin, every year they have to file an annual report with the SEC, which is the Securities and Exchange Commission. They're the body, the government body is a federal government organization, and they're the government body that monitors all these publicly traded companies and sets the policies and the rules for trading practices that occur on stock exchanges. And so they're the government body that oversees a lot of that stuff. And every company has to file several things with them, but one thing is their annual report. And that's what we're going to focus on, is these annual reports that get published. A company can pick its year end. It doesn't have to be the calendar year end. They may find that it's beneficial to them to pick a different time of the year. So some of the car companies, they don't close their books until January or February. And that's totally fine. As long as you file the necessary paperwork with the IRS, they're okay with you picking whatever year end that you want to file under. Most companies do pick December 31st, the calendar year end. So you notice you do have 120 pages. I'm not going to make you read through all of them. We're going to focus our attention on pages 59 through 63 of the report. And if you scroll down, let's just take a quick peek what we got here. We've got some financial highlights. So just to give you a sense for how large they are, these numbers that are reported here are in millions. So that means that sales for 2019 were $59,812,000,000. So it's a very large company. Okay, so some financial highlights at the front end. And then you see a letter from the Chief Executive Officer. So there's officers for every publicly traded company. There's the CEO, which is Chief Executive Officer. There's the CFO, which is Chief Financial Officer. There's Chief Operating Officer, COO. And there might be a Chief Information Officer as well. So there's several different officer titles for publicly traded companies. And they're all managed by a board of directors, and those are appointed positions. And a certain number of those positions have to be independent board members, meaning they have no ties to the company, financial or otherwise, that would lead to any kind of bias in their decision making. So anyways, that's that letter. If you want to read through it, you're certainly welcome to do that. It's not required to do the assignment. All right, let me let this load. Keep going. It's a fairly long letter. There's your board of directors there. Okay. This is retired chairman and chief executive officer of GM as one of the board members. So those are sometimes very interesting to look and see who it is that sits on these company boards. Very powerful positions. These are your executive officers. Okay, now this document, you can see it says here, United States Securities and Exchange Commission. So that's what I was referring to, is SEC. That's what that stands for. And they're the government agency that oversees all the publicly traded companies and all the regulations with respect to those companies. This document is called a Form 10-K, and that's just another name. It's the SEC name for annual report. And it says here that it's as of December 31st. So it's telling you that's their year end, that's their financial year end, as well as the calendar year end. Alright, so we're going to scroll down. I think I can type in right here. Let's see if it works. Page 59. I don't know if that worked or not. Okay, it did. So 59 in the document is not 59 in the SEC. So you got to scroll down until you see 59. I'm getting there. Okay. So here's the first page that I wanted you to look at. And you'll notice that this is called the Consolidated Statement of Earnings, which is a fancy name for the income statement. So you see sales, and they've broken it out into product and service sales. You see cost of goods sold, which is cost of sales, again broken out by product, service, and other things. There's a severance and restructuring charge. That usually means that they've disposed of a segment of their business and they had a write-off that they recorded during 2018. Way beyond the scope of this class. I want you to look big picture, right? You got sales, you got expenses, and you got profit. There's net income right there. So net earnings is another name for net income. Oftentimes in the financial statements, you'll see companies kind of play a little fast and loose with the names they use, and that's very common in accounting and finance classes. You'll see the same name. You'll see different names that mean the same thing. So just kind of roll with the punches. Do that. All right, so net earnings is net income. So that means they made $6,230,000,000, because these are in millions as well, right? In millions, except for per share data. All right, so there's your income statement. This is information about the shares on a book value basis. So that's how much profit you made per share. And these are not in millions. That's $22.09 each share made in profit this year, 2019. Okay, the next one is a statement that I haven't taught you. It's more, if you were a major in accounting, you've learned this report in your intermediate accounting class. It's beyond the scope of the class, but it's one of the 5 reports that I want you to list as part of question 1. So question 1 is list the names of the 5 financial state reports given on these pages. So this is the second one. I'm not going to have you analyze it or understand it thoroughly. That's beyond the scope of this class, but just list it. So that's a good place to start. Then the next one you see is balance sheets, and you've got 2, right? 2019 and 18. And you're going to notice it looks very similar to what you learned in our class. So assets are listed first, and you see them grouped. The current asset are short-term assets, things like cash and receivables and inventories. And then you see a section below that, so it's subtotal here. But below that, you see property, plant, and equipment, goodwill. Again, the only ones that we've covered in class so far are property, plant, and equipment. So I would hope, oh yeah, that's your buildings and equipment and machines and trucks and vehicles and all that kind of stuff that's in here. And when it says net, that means net depreciation. I'm not going to expect you to understand these. We haven't covered them, and we're not going to. So, again, if you want to take intermediate accounting, you can cover those additional assets. Under liabilities and equity, you see that also grouped by timeline. So current liabilities means that you're going to have to pay these liabilities in the next 12 months. So some of these should look familiar. Accounts payable, we've worked with that. Salaries and benefits and payroll taxes, that's wages payable, same idea. Some of these things are beyond the scope of our class, but just recognize that these are amounts that the company owes to various parties, third parties. Under long-term debt, you see things like pensions, and again, way beyond the scope of our class, but they're just liabilities that the company knows. So just recognizing that these are the debts that the company owes. All right, so total liabilities, $44 billion, and we had assets of $47 billion. So most of these assets are financed with debt. And if you look at equity, here's your common stock account. You're familiar with that. So this is what we call par value, meaning that it's the number of shares that are outstanding times the $1 par value. And a company can have par value in its stock, or it doesn't have to. It can have no par stock. Again, beyond the scope of the class. There's so much more for you to learn. We're just scratching the tip of it, right? Getting you familiar with financial statements. There's your retained earnings that you're familiar with. So this is money the company has retained in the business. And then this is accumulated other comprehensive losses. So again, beyond the scope of the class, these are things that the company has made adjustments for, and they're going to show up in that report up at the top that I told you I'm not going to cover in the class. Anyways, when you back that out against the retained earnings, notice that the equity amount is not very large. So $3,171,000,000 in equity, $44,357,000,000 in liabilities equals $47,528,000,000. And that's part of your assignment is you've got to go through the balance sheet and show me those three pieces. Show me that total, and that total. Okay? Okay. And then here's your cash flows. Again, we're going to cover this in week 3, so you haven't seen it yet. And you're going to be doing the indirect method, which is what you see here, listed here. And when I've asked you for real simple things, like how many sections are there in the statement of cash flows? So there's operating activities, that's the first section. There's investing activities, that's the second section. And there's financing activities. So that's the kind of stuff you're going to be doing in the assignment. It's just kind of poking through here and going, oh yeah, I see that. It's organized into 3 groups. Right? And then there's a total right there for the 3 groups. This 742 is the sum of this group plus this group plus this group. All right, and then the last one, the 5th one, is a statement of equity. Again, a little beyond the scope of our class. I have you create real simple statements of equity by just focusing on retained earnings, because that's where all the pieces come together when you look at the profit that adds to equity and you look at dividends. And you'll see that there's the net earnings that are added to retained earnings for 2016, there's 2017, 2018, and 2019. So notice that that net earnings right there, $6,230,000, ties or equals up here on the very first one. Right there, net earnings. So the income statement becomes part of the statement of equity, and the statement of equity balance, let's go back down so you can see all these little tie-ins. Statement of equity, so go to 2019. There's $3,171,000,000, which is exactly what we just looked at when we were looking at the balance sheet, right? There. $3,171,000. So you're going to see those tie-ins. The reports are interconnected and articulated together. And that's part of what you're going to be going through when you answer the questions. So let's look at some of those specific questions now. I think I got them over here. Yep. All right, so number 1, list the 5 financial statements given on these pages. So I just went through those 5. Just listen for me. Give me the titles, right? Statement of earnings, balance sheet, statement of stockholders' equity, statement of cash flow, statement of comprehensive income. And then I'm walking you through each one. So question 2 is the first financial statement is called Consolidated Statement of Earnings. And this is just a fancy name for the income statement. Given what you've learned in class and what you see in the report, how is the report structured? Right? You should say something, well, revenues are listed first and then expenses, right? Just like what you learned in the class. Keep it simple. What's the basic underlying formula to compute net earnings? So how do you get net income? What's the formula that you use to be able to calculate net income? Answer the question in terms of the 3 main accounting elements, right? So revenues and expenses. Okay? Very, very big picture is what I'm asking you here. Don't dive too deep into the pool. We're just skimming the surface. And then number 3, are profits up? So you did have, if you looked at that, right? If you look at the income statement again, it's a little small. There we go. Right here is income statement. I'm asking you, profits up, down, right? So this is what they were in 2017. right here, and then 2018, 2019. Accounting reports most often are organized that way, where the oldest date is farthest over on the right and the most recent financial information is close to the words. Right, so we list the most recent first and then it goes out older data after that. Other companies, you have to be careful when you look, because other companies reverse that order. That started happening probably in the 1980s. Companies started doing their own thing a little bit. And so now you got to just check it out, make sure you are watching the direction of the dates. So do that, because otherwise you'll come to the wrong conclusion and you'll give me the wrong answer for the question. Okay, so that's part 3. Are profits up, down, or consistent? And then the next one is revenue holding steady. So here's your revenue. You can answer that question then. Is revenue holding steady, or is it going up, down? What's your first impression of the company? Are they growing? Are they more profitable than they were, or less? And again, keep it brief. You don't have to get crazy here. What do you make of the huge increase from 17 to 18? So here's 17 to 18. Determine what line is causing the biggest difference. So I want you to look through line by line and see if you find anything that stands out to you as being kind of odd. That would make a big difference in the bottom line. And there is one line item that really stands out like a sore thumb. And I'll clue you in. It has to do with things that the federal government changed as a result of changes they implemented with tax code. So I'll leave it at that, and you can keep looking, see what you find. Part 4 was Statement of Stockholders' Equity. So it's on page 63 of this report. That's 59. Go to 63. There we go. And you got to go down, because this is 17, 18, 19. You got to go down to 19. And it says, can you find the net earnings, net income, from the consolidated statement of earnings, which is the income statement, in the stockholders' equity report? And I already showed you that already. So it would be right here. And for 20, that's 19 right there. This is 18 right there. And this is 17 right there. All right, so talk about that yes, those numbers, those net income numbers, become part of equity. So you see them blending in there. And when you get to next week and we start working in Chapter 5, you're going to actually do that. You're going to do a closing process where you move all the revenue and expense amounts, your net income, over into equity. So this is your first chance to kind of get that idea that that's what we do. All right, then I say, what column does the net earnings amount appear? I'm referring to this here. So it shows up in retained earnings. It becomes part of retained earnings. And you saw that when you were working on Chapter 3, the first time we booked revenue and expenses, we dumped everything in retained earnings. And the idea there is to plant the seed, that that's where those dollar amounts end up going when you do the closing. Chapter 4, you actually put them over into the revenue and expense account so you could build an income statement. And then Chapter 5, you move them all back to retained earnings. So that's where you're going with that. All right. All right, so hopefully that helps you through question 4. And then question 5, the balance sheet. So what I'm going to have you do there is tell me, okay, on page 61, given what you've learned in class and what you see in the report, how is the report structured? Again, be brief. So I'm not looking for a lot of detail here. What I'd like you to say is the report is structured. It lists assets first, and then it lists liabilities and equity. And you can see the accounting equation that total assets are equal to total liabilities and equity. The numbers, they balance out. So it's very apparent that there's a balancing that goes on. You could also say something about the fact that assets are categorized. So there's a group of current assets here, which are short-term assets, assets that get used up in the short term. And then there's Short-term liabilities as well, current liabilities. Those have to get paid in the short term. And next week, when we talk about liquidity, which is a concept related to these two groups, current assets and current liabilities, that will make more sense. So it's just kind of introducing you to it now. All right, what else? Our assets growing. So you've got 2 years here. You can comment on that. Is the growth in assets seem reasonable given the growth in sales? So generally you'd see them grow together. If revenues are growing, assets would grow right along with them. The company's getting bigger. Right? So if revenues and profits are growing, that means cash is going up. You're getting more revenues. You're getting more cash flow, hopefully. Right? There's some timing things there with accrual-based accounting. But generally speaking, you would expect your assets to grow if revenues are growing. It's to some degree. So I ask you to assess that, and then I ask you about liabilities. Are they also growing, total liabilities? So you can just look at the totals, focus on the big picture. What's your take on the relative portion of debt to assets? And of course, it's very high, right? So this company has a ton of liabilities relative to assets and very little left in equity. And I want you to tell me if you think that's a risky position for them to be in, to have so much debt on the balance sheet. Okay? Part of that has to do with something I've been watching companies do a lot over the last 10 years or so since we had the mortgage crisis in 2008. I've seen it more and more where companies are using a lot of their cash to buy back their stock. And when they do that and they buy back their stock, it reduces their equity balances. And if we looked at the statement of stockholders' equity, you would see that. Let me show you. Okay, repurchase of common stock. So almost 100% of their earnings were used to buy back stock. So they didn't reinvest in the company, they just bought back shares. And then in the year after that, still quite a bit of money spent to reacquire shares. And then again, reacquiring shares. Dividends are monies that are paid to the shareholders. That's actual cash that's being surrendered to the shareholders. So a large portion of the profits got paid out to shareholders, both in repurchases and dividends. Same here, right, and here. Huge amounts of money is going back to reward the shareholders for their investment in the firm. It does help the company to buy back shares, but it has the unintended consequence of hollowing out your equity. So I've seen a lot of companies pursue that strategy to try to strengthen their financial position, but it makes their balance sheet look terrible, right? Because it reduces their equity. One way for you to assess whether or not you think that this is an unhealthy position is to look at their market value. So, of course, these are publicly traded companies. The company sells shares of stock in the market, and when we multiply the price per share, which is currently $354.18, times the number of shares outstanding, we get a figure called market capitalization, market cap. And this is part of what you have to analyze in the next part of the question. So their true equity on a market value basis is this amount, this 99 billion. And on the balance sheet, what we said right here was only 3 billion. So the true value of their equity based on the value of their stock is 99 billion, not 3 billion. And so when you think about that and you compare it to these liabilities, and these are market value liabilities. So that's the funny thing about the balance sheet. And it has to do with GAAP and the way GAAP is structured. GAAP, you don't write your assets up and you don't record the value of the company on the accounting records. You only record transactions that have occurred, which is what you've been learning how to do all week. Right? You book transactions as they occur. But it really has nothing to do with what the company is worth. And that takes a while for students to get the hang of. For our purposes in this class, I'm just asking you to recognize that that difference exists and it's important. All right, so then I ask you in the assignment if you could kind of reconstruct the balance sheet using what you now discovered about Lockheed Martin. So you take this number, 99 billion, and add it to 44 billion, this number right here, to derive the market value of the company's assets. So you add that 99 billion to this 44 billion and change, and that's what the market value of the assets. So then you can reconstruct the accounting equation given those numbers. And that might be the hardest part of the assignment, is wrapping your mind around that, and I really look forward to discussing this with you on the discussion board so we can kind of unpackage that a little bit more. It's pretty cool. All right, part 6 in your assignment is the cash flows, and then the only thing I'm asking you to do there is tell me the major sections. And I already went through that with you. So again, you've got operating activities as the first section, investing activities is the second section, and financing activities is the third section. And when we get to week 3, I promise we'll dig in there and you can examine it in more detail. Then I also ask you to verify that this balance right here, this cash balance, is the same exact cash balance that you see on the balance sheet. There's another interconnection. So if we go back to the balance sheet, right there, 1514 cash and cash equivalents. And let's check the previous year, 772. So there you go, 772. So everything checks out, right? Everything's articulated. What else is in that one? Okay, so I ask you, why do you think it's one of the main financial statements? And hopefully, you just kind of use your common sense there. Cash flow is important because without cash, we're kind of dead in the water. Well, we like to say cash is king. So it's important for us to understand where our monies, our cash, are coming from and where they're going to. And another thing I like to check is this total cash from operating activities got to be pretty close to the profit, which is right here, your net income. Otherwise, you might be booking accruals that aren't justified and won't turn into cash, and that's a red flag we want to avoid. So this is a good sign that they got more cash than they have net income coming in for the year. Okay. All right. The last one. What questions do you have about the 4 main reports at this point in the class? So what I mean by 4 main is cash flows, the stockholders' equity, which was at the bottom, the balance sheet, and the income statement. So don't talk to me about this one. We're not going to get into that. Again, if you find this subject interesting and you think you want to major in accounting, then you'll unpackage this one in intermediate accounting. Okay? So your questions can relate to the statements in general, or you can have specific questions, like if you want to dig in on some of these things. Just don't go too far over the top, right? Because I don't want to go too far astray. Stay connected to what you're learning in the class, and don't go too far adrift. If you wanted to know things like, well, let me go to the balance sheet for a sec, because there's some stuff there that you maybe want to ask. Like, what's goodwill? That would be an okay question. What's an intangible asset? What's pension liabilities mean? Things like that. Or maybe, what's this additional paid-in capital? Even though it's 0, what is it? Or anything like that. If you want to ask those questions that you have some kind of interest in, you want to dig in a little deeper, that would be amazing. Okay, you can also tell me what areas you thought were challenging that you needed a little more help with, so that we can focus our attention in the discussion on areas that you want me to. All right, I think that's probably enough. So I'll give you about a half an hour there, video for you to explore these financial statements for Lockheed Martin, give you a sense for where they stand on a big picture basis, and I look forward to reading your posts. If you have any questions that you'd like me to address, be sure to let me know.